Tina, the geopolitical environment is certainly complex. So before we start talking about markets, where do you see the United States' relationship to the rest of the world right now?
So what we're seeing is part of a transition from a unipolar geopolitical system to where the U.S. was a global hegemon to a multipolar system. And what that means is that the U.S. no longer has the ability to control its allies in terms of their sort of independent geopolitical action. They can be belligerent, and the U.S. is more reactive to other nations' independent foreign policy.
And in this fracturing world, so far this year, we've really seen Europe do well when it comes to the equity markets. Mm-hmm. I'm not sure if it's going to last throughout the year. What are your thoughts on investing in Europe as opposed to the U.S.?
Well, what we've seen is a function of two things. One is that, Europe has put in place several reforms, capital markets reforms and integration that I think are flattering the opportunity in Europe. You're seeing increased investment, particularly in Germany. And then on the other side, in the U.S. assets, the risk premium is pretty dear. And so, U.S. and institutional investors are overinvested in the U.S. And so any bad news, tariffs, whatever, has been punishing to U.S. assets.
Can you dig a little bit deeper as to how you are investing in Europe right now? Because as you mentioned, some countries within Europe are doing better than other countries.
Yeah.
And they have their own rivalries over there.
Yeah.
So talk about investing in Europe specifically and the best ways to make money.
So what is happening with the capital markets reform is sort of a freeing up of credit growth. And so private equity in Europe is one area I would focus on, but also industries or sectors exposed to the domestic market. So small cap, industrials that would also benefit from infrastructure investment, and lower LNG prices. Telecoms, banks, again, very locally focused, local within Europe focused industries.
And then finally, what about back here in the U.S.? I understand that people were overinvested in the U.S. and now they're looking for other places in the world, whether it be Europe or Asia. How are you investing in the U.S. right now?
I think it makes sense to be defensive because I actually think we're due for a relief rally in U.S. equities because, as you know, they've had a tough time this year. But I think longer term that there are some headwinds, higher structural interest rates, lower earnings trajectory, mostly from the tech sector. And a dollar that is 16%, trading at 16% above its 20-year average.
All right. Well, thanks for coming on and talking about it.
You're welcome. Thank you.